Welcome back to the Grenadier podcast, Real Estate Uncovered. Today I speak with Scott Carragher, financial advisor. He's going to give us tips for buying a home with a low deposit. You obviously love this business. Tell me what you love the most about it. Today, an absolute exclusive. Welcome back to the Grenadier podcast, Real Estate Uncovered. Well, welcome, Scott, to the Grenadier podcast. Can you introduce yourself to us?
Yes, absolutely, Lisa. So I am Scott Carragher. I'm the owner and financial advisor at Mortgage Life. Being a financial advisor, we used to be called mortgage brokers, so that's what most people are familiar with.
Fantastic. So today we're talking about how to buy homes with a lower deposit than perhaps the normal 10%. For first home buyers, what is the challenges around that?
Yeah, buying with low deposit, I suppose there are a few different challenges. And firstly, I suppose it comes down to confidence with people, and it's having that confidence. So I see sort of two different types of first home buyers. Some people are very prepared. They're all over their numbers. They know what their income is down to the cent. They've got spreadsheets and apps and everything.
Yes.
So those people are confident numbers-wise.
Yes.
But then what can happen with those people sometimes is they get that, they're very analytical, and they'll look at a property and they'll analyse everything to the nth degree. They'll quibble over $5,000 or $10,000 at the end.
Yes.
And I guess they can get stuck sometimes in that paralysis by analysis, where they are just overanalyzing everything, and then it can stop them taking action. Well, what I see with some of those people is that they will see a property quite early on. You guys will see this quite regularly. They see a property early on that's actually quite suitable for them and would have been a great deal at the time. Months go by, they haven't bought anything, they've maybe missed out on another couple. And then every other house they look at from then on, they're comparing back to that one. And because they haven't taken action, the market can move, and they find that they're actually dropped down into that next bracket, and then it can be very, very hard for them to move forward. So it's taking action quickly, and setting deadlines can be a challenge. But then there's the other side of things where people probably lacking a little bit of confidence, and they aren't so confident on their numbers. They're not so sure about whether they can buy right now. So a lot of people will come to me and they will say, look, I'm not quite ready now, but maybe in the next year, maybe in 2 years, I'll be looking to buy a house. And then I look through their situation, and they've actually been ready for a while. So
Great.
They're lacking in confidence.
Yeah.
They may not have the right team around them as well. So working with a mortgage advisor is important. A buyer's agent, especially a Grenadier buyer's agent, very, very important to be working with the right team. With a low deposit for a first-time buyer, they have to be a little bit careful, because the margin for error is a lot smaller.
Yes, of
so
course.
If they've only got 5% deposit, for example, if they overpay by 5%, or if the market moves after they've bought, if there's unforeseen costs, within the property that they weren't all over, that can be a big challenge as well. So I guess it's that scope and the margin for error.
Are there other loan options or government schemes that could help people with those deposits?
Yeah, definitely. So there's still the first home loan, so through Kaingaora, very popular. People can still get in with 5%. So big misconceptions in the market, that you need 20% deposit, or you have to have 10%, or your interest rate's going to be terrible if you don't have 20% deposit. So really important that people are getting good advice, I think. And those 5% first home loans can be very good. Like a young couple, for example, earning not much more than the minimum wage, maybe they're, if they're lucky, 60 to 65,000 a year each, working full time. They've both been in KiwiSaver for 3 years. They might have 15,000 each in KiwiSaver, so a 30,000 deposit in total. You'd be looking at potentially buying up to 600,000. So it's actually not as hard as the media and family members or other advisors who are reasonably opinionated might be telling these first home buyers. It's not as hard as it seems out there.
Yes.
Yeah, particularly in Christchurch.
How can those first home buyers improve their chances of getting approved by a lender? Is there some things that they can do to make sure they've cleaned up their financial world, or what would you recommend?
Yeah, I think it's important that they are aware of how they look to banks, I suppose, is the main thing. So what are their accounts? What do their spending habits look like? Have they been regularly saving their deposit? Can they prove that they can afford the mortgage payments moving forward? So if someone did have a large savings balance and that's just deteriorating over time, well, how does that look to the bank? It's not always about obvious things like taking out car loans or personal loans, short-term debt, credit cards. That sort of stuff has an impact, of course, and I would encourage people to avoid any short-term debt if they're looking to buy a house in the near future. But it can be those smaller things. What paints that overall picture as well? So spending habits is a big one. Keeping your accounts in order, no unarranged overdrafts, even things like your power bill, your spark bill, that sort of thing. That all gets factored in. They report into credit agencies, and that's positive credit reporting or negative credit reporting if they haven't been paying their bill, and that builds the picture and can reduce credit scores as well.
And what sort of time frame are banks looking back over your account management, I guess? Is it 3 months or could it be longer?
Yeah, so it's only 3 months bank statement. So they really need to make sure they've got 3 months of clean statements, hopefully a good savings history, no unarranged overdrafts, no bounce payments, nothing like that.
Yes.
But when they pull the credit report, they're going to look back over 12, 24 months. So it is longer if they've missed bills.
Yep.
And one of those things in isolation, is going to be just overlooked by the bank. That's not an issue. But it can be, death by 1,000 cuts sometimes with a loan application when there's a few things that add up.
Could buyers potentially get their own credit report to have a look at it, and maybe if there was, say, a Bay Corp or something, that might have been a misunderstanding more so than a default, can they clean it up at any?
Yeah, absolutely they can. Yeah, and I encourage people to do that. There's sites now that people can look up. They can have a pretty good idea of what their credit score is, and then there's no surprises, because the last thing they want is to go and apply for this home loan and then get declined based on something they didn't even know existed. And first-time buyers are often younger people, and they may have spent some time overseas, bills may have been sent to an old address. There's all sorts of things that can happen.
Yeah.
And I think the more people are aware of those things, then the better their chances are for success. Because when we send the application to the bank, we want it to be a slam dunk. We want all the questions to be answered before they're asked, all the information provided, and the bank's just unable to say no because the application's so strong.
In terms of, you're obviously putting their file out to several banks, or you might start with who you think's the best fit. Is there much competition amongst the banks to secure these first home buyers?
Yeah, there is. So not all of the banks do the first home loans with 5%. So that's something that first home buyers need to be aware of. Chances are their bank isn't a part of that scheme. So if they go in with 5% or anything less than 10%, chances are it won't be that bank that can help them.
In terms of the first home buyers you meet, what roughly would be a percentage of those that have, say, got 20, those that have got 10, and those that have got less than 10?
It will be a very, very high percentage that have less than 20%.
Really?
Very, very high. Yeah. And there could be, they all have KiwiSaver, so 99% of people are using KiwiSaver. But the bank of mum and dad is obviously huge as well. So people are exhausting all avenues. But the bank of mum and dad, it's quite interesting, are actually the 5th biggest lender in New Zealand. So
don't I know it?
So outside of the main banks, the big 4 banks, they're the next biggest lender. And I saw a stat that over 2/3 of them don't expect to be repaid either. So
that is not my children.
Just so you know. Yeah, so I mean, there's a few things that are happening. Co-ownership's another big one. So people buying together with friends or family, and them all being a party to the loan and all going in together. I mean, people need to explore all of these avenues to be able to get into their first home.
For buyers with those lower deposits, is there any specific property type or perhaps locations around Christchurch that you would think are more suited?
Yeah, absolutely. I think Christchurch is ripe with opportunity for first-home buyers. There's heaps to choose from. There's a lot of good areas. I mean, I'm a little bit biased because I grew up on the east side of Christchurch and still live there to this day. But suburbs like Burwood, suburbs like Shirley, Parklands, North New Brighton, some people think that that's quite a distance from the city, but it's really just 10 minutes drive. And people from around the country, Auckland and the like, they sort of think that's a very, very short commute for them. In terms of property types, if people are looking for an older 3-bedroom property, that's still there with a bit of land, double garage, that's still there in that first home buyer bracket. And again, around the country, it's not. Look at Auckland, that's $1 million gone. And also property types, if they do want something a little bit newer, they want to be in closer to the central city, well, there are a lot of new build townhouses. Younger people now, first-time buyers, they're not always wanting to do the garden. They don't even have tools. They don't need a garage. You know what I mean?
I've never heard of a wheelbarrow.
Exactly. So they don't want to spend their weekends doing that stuff. So there are a lot of options in Christchurch. And I think, again, people are going to look back in future and think that this was a real golden age and a good period to get in. Like with a commute a little bit further out, North Canterbury hasn't had the same price growth as the likes of Selwyn has. So the likes of Kaipoi, I mean, it's very, very close. Basically another suburb of Christchurch, very short drive out there.
Yeah.
And great opportunities for buying, especially for first home buyers. And it's not, I always say this, it's a bit of a cliche, but it's not their last home, it's their first home, So they can get a foot in the door, foot on the ladder, and then start to repay that loan, grow a bit of equity, and then move forward to something more long term.
So Scott, what's one piece of advice that you would give first home buyers to help them stay motivated?
Yeah, look, it is about staying motivated, because they might miss out early on. There may be setbacks along the way. Having a good team around them is important, and I think making that commitment, like I said earlier, around making a deadline. I think people that are deadline driven, then they are more likely to actually take action. So it's not being afraid to take action. Keep motivated. You'll get there eventually. But I think talking to a mortgage advisor, getting alongside a good buyer's agent early on, they're the people that I see actually achieve their goal of getting into their first home.
Yeah, absolutely. And what I love about what the Harcourts team do is they are very good at working alongside buyers, and they almost become a bit of a counsellor, because, you're either learning or you're winning. Yeah. And so sometimes those learnings take a bit of a knock, but you get back up, your agent gets you back out, and you have a look at another house, and you're like, okay, we're back on the horse again. Let's keep going. Scott, you so eloquently said at the beginning about how first home buyers can sometimes see a great home early on and discount it because it's early and we want to see 100 homes first.
That's right, yeah.
But what other mistakes can first home buyers make?
The biggest mistake's getting the wrong advice, I think.
Yes.
And also, one thing people can do to sort of improve their chances, they've usually come to me or they've come to another advisor because they have a goal. They want to buy that first home. And it's setting a deadline around that, whether that's an imagined deadline or a real deadline, because a lot of people are flatting or they're renting a property and their lease is up. And I find those people are, because of that deadline, are more likely to actually do something and actually take action and buy. So I think, particularly that, or just setting their own deadline can have a huge impact. Yeah.
I think that's so true. We are deadline driven by sort of by design. And I think if you just think, sometime over the next 2 years we might, you are going to drift around the market. But there's no better time to buy real estate than now, is there?
Yeah, that's it. It's the old saying, time in the market rather than timing the market, and look at what happened through COVID and everything.
Yeah.
Where a lot of people, there were forecasts from the banks that prices were going to drop by 30% and all that, and then look what happened. And if people weren't in the market then, after that price rise the last few years, well, look what's happened, and who could have predicted that? No one would have predicted that was coming. So it's all about, the best time to buy is always yesterday or right now. And I think that still applies, and I've seen so many cases with first home buyers where they've been paralysed by analysing too hard, not taking action, and then, they end up getting into something a couple of years later, but it's that next bracket below.
Yeah.
And they could have had so many gains in equity if they had have just taken action early.
Get involved, talk to someone, talk to Scott. We'd love to help you.
Yes, absolutely would. Yeah.
Thanks so much, Scott, for all your insights today.
No problem. Thanks for having me, Lisa. Really appreciate it. Good to catch up.
Thank you so much for tuning into the Grenadier podcast. We hope you've enjoyed the show. Please give us 5 stars. We'd really appreciate it.